I don't mind making an investment if it's a good opportunity in a certain industry. And I like the idea of doing private investments and being able to control some of the return on that. I remember my uncle, he owned rental properties, and he loved the fact that if you want an increase in rent, you can go paint it, put new carpet in, and add rent an extra $200 a month. By doing it, he can control the return, than opposed to investing in a public company to do it. So that was his kind of thing, and it got me interested in the idea of running private companies and being able to control a little bit, or at least have influence over what that return is.
Welcome, Model FAs. David DeSell here, president of the Model FA, as well as your host of the Model FA podcast. I'm pretty excited about our guest that we have here today, Jeremy Straub. So Jeremy and I actually first came across each other, introduced through Michael Yokin. So Michael, if you're listening to this, thanks for bringing us together initially. Back when I first left being an advisor and got into the consulting space, we had come across each other. And over the last handful of years, both of our situations have changed drastically for the better. So it was cool to be able to catch up on our reintroduction call before the podcast. So I'm going to take a moment here and introduce Jeremy to all of you. With that being said, this podcast is going to be a little bit different. So Jeremy is in the financial services industry, but he's also got a hand in multiple other industries and businesses. And part of the reason why I wanted to have Jeremy on is because there's a lot of advisors out there who are generating some good revenue, and there may be an opportunity to further diversify and expand into other businesses, other industries, and not just be, not that it's negative, but not just be an advisor, but have your hands in multiple different things. So I'll go ahead, read Jeremy's bio, welcome him to the show, and then we'll go ahead and dive right in. So Jeremy's father owned multiple successful car dealerships in the Northeast and ended up losing everything in the recession. So when Jeremy saw that happen to his dad, he decided that he never really wanted to put all of his eggs in one basket. As a result of that, and this is where it begins to be very impressive, he owns 9 different businesses across 5 industries that employs 1,500 people, serves 250,000 clients, and generates over $100 million in revenue per year. And he has in his firm $15 billion with a B in assets under management. He's also the co-author of Cracking the Code to Success with business guru Brian Tracy. And he also hosts a podcast called Youpreneur and sits on the board for YPO. Jeremy's mission is to help other business owners navigate opportunities and redefine what is really possible. So with that being said, Jeremy, great to be reconnected and welcome to the show.
David, awesome to see you again. Appreciate you having me on the show and appreciate the nice words.
Of course. Well, with that being said, give us a sense as to, because I got some topics identified that I want to chat through with you today, but help kind of set the stage and give us some context. So did you start in the financial services industry and kind of branch off from there? Did you have a different start to where you were able to generate revenue to then diversify? Like, help us understand the journey up through this point.
Yeah. So 22 years in the financial services industry. So I started right out of college as a financial advisor, which back then was American Express Financial Advisors, Philadelphia, and worked my way up through the leadership ranks, became an executive with Ameriprise, helping oversee their employee channel, reporting up to the president of the company. And probably about 7 years ago, after 15 years with them, I started my own venture with Coastal Wealth.
Awesome. And just so we have some context, whether it's the types of companies or the industries, however you kind of want to list it out, we have financial services as one area that you're involved in. What are the other areas that you're involved in, just to help kind of give folks a vision as to what's possible?
Yeah. So you have financial services that kind of breaks down to a couple different segments to it. So obviously the asset management, life insurance, property casualty, group benefits, in the restaurant business, which is an interesting one in Philadelphia and down here in Florida. Along with that, in a couple other spaces in e-commerce, and then in the real estate side.
Awesome. How do you manage all this stuff?
That's a good question. So the good part in scaling businesses, you start to see that there's repeatable systems and processes that you can put in place that go across industries. And if you're able to put that infrastructure in place, you can scale businesses no matter kind of what the widget is they're selling or what market there is. So, I think for the first 15, 18 years of my career was really understanding how to be able to set up those systems that you can be able to move across the different industries. And then as I started to invest in some of my friends' ventures, I realized that I can be able to offer advice and opportunities to be able to help their business grow faster than it was doing on their own.
Now, do you still primarily spend the majority of your time in financial services, or do you find yourself spending more of your time in some of the other businesses that you mentioned?
No. 95% of my time is in the financial services side, whether it's on the asset management or insurance side. That's really where my expertise lies. That's where my passion lies. And I know there's multiple companies in that space. It's the space I'm probably most comfortable.
Cool. There's a book I read that I thought about as you were kind of chatting through that. I agree, systems and processes and putting things in place for scaling can be transferred from industry to industry, and that helps a lot with leverage. But the book that I read that I had in mind is, I don't know if you've come across it, you're certainly living it, but it's called Who, Not How. And basically the premise, which you can probably tell, based on the title alone, is when you're entering into different ventures or you're trying to do certain things in your business, worry less about how you're going to do it and worry more about who is going to help you do it, finding people that have complementary skill sets, perhaps a different amount of time that they can spend in that business venture. And it seems like based on still spending 95% of your time in financial services, you found some pretty talented people that can take the ball and run with it, so to speak, as you're there for, support, maybe investment capital, things along those lines. So it seems like you got a pretty good team around you to see all this stuff through.
Yeah, I think you're exactly right. The book Good to Great was always about put the right person in the right seat. And so if I take a look at a lot of the businesses, if you are able to attract the right talent and put them in a space where they could shine, you really got to kind of get out of the way. What I found is the scalable part is the operating system of how you manage the people and you manage the infrastructure. But then regarding strategy, direction, visions, day-to-day decisions, a large piece of that is putting in the right person in the right seat. And so usually what I try to do, whether it's, let's say with any of the financial services companies, is when there's an open seat or an open opportunity, I take a lot of time to be able to figure out exactly what am I trying to fill? What are the attributes of that person to fill that seat? What are the experience I want them to have? It could be different from other people that are in the team or on that role so they can complement the rest of the people there. And then I do an extensive search. And sometimes it feels a little long, but I have a position open. But I'd rather kind of that whole slow to hire process. I take the time to be able to try to get the right person in. And then what I'll do is I'll build that operating system in place. You can use stuff like from Traction. I'm sure many people read the book Traction and probably listen here. Use that type of operating system to give them direction on how to actually run the business per se. But when it comes to the strategy and creating the extra alpha inside that business, let that talent be able to lean on what their experiences are and their gut is to be able to add some strategic vision and direction.
So you're in 9 businesses, 5 industries. You're not old by any means. You got plenty of runway left. What's your vision moving forward? Are you going to continue to expand within the companies that you currently have kind of exclusively, or are you just continuously kind of moving and shaking, open to opportunities and want to expand across multiple industries and maybe additional businesses as well? Like, what's kind of your vision moving forward with that?
I think it's a moving target. So if I look back, I think, and you said a little bit of my biography, is my father, when I got into business, I remember going to him saying, hey, you should invest with me. We'll invest in the market and, walk through what a typical return is and a well-balanced allocation. And he said to me, as a business owner, running car dealerships, I can get 20 to 30% if I invest in my dealership. And so all his capital was always reinvested in the dealership to grow. And so when the model that he had set up didn't work, he didn't have any outside investments to be able to make up the difference. And so I think I probably over diversified myself with other businesses in thinking that it's a great diversification piece. So if I look longer term, is I don't mind making an investment if it's a good opportunity in a certain industry. And I like the idea of doing private investments and being able to control some of the return on that. I mean, my uncle, he owned rental properties, and he loved the fact that if you want an increase in rent, you can go paint it, put new carpet in, and add rent an extra $200 a month by doing it. He can control the return than opposed to investing in a public company to do it. So that was his kind of thing. And it got me interested in the idea of running private companies and being able to control a little bit, or at least have influence over what that return is. I think, though, staying in your wheelhouse and trying to find opportunities that might be in line with what your existing business is, it's a complementary side to what it is probably a better way to go for deciding on different business ventures. And let me give you an example. So if you're running a financial advisory practice, like many of your listeners probably are at that part, you've always referred out auto and home. And maybe it's starting a property casualty franchise or agency to be able to do it. Maybe it's a matter of, you wanted an in-house accounting firm and you decide to purchase an accounting firm. And now you guys can refer business back and forth, assuming you can get, your compliance department to be comfortable with being able to do that. Trying to find some of those businesses that might not be a complete diversification, but it's still in your wheelhouse to understand how to grow that business. And it might be complementary to the distribution that you might have as a financial advisor and to help you better serve those clients, but might not be in what you've learned. Maybe you're more of an asset management guy or girl, and you don't really know anything outside that. That might be the better place to go. Or maybe it's buying a building and starting to understand real estate, and you buy a building where you're renting space from, and you become a little bit of a landlord to rent other spaces, but it's still where you're working from already. That would be probably where I would start. And I wish I would not have got distracted with shiny objects sometimes, because it's kind of fun. Like my father used to say, guys always want to own cars and bars. So people always want to be in the car business in the dealership or own bars. And I think when I invested in my first restaurant with my friend, it was the idea that I wanted to own a bar, and it was my place that I walked into. But the truth be told is, I didn't know much about the restaurant business, and you can make some really bad investments in there. Fortunately, they've done really well, but it's one of those ones where I think you could stay in your wheelhouse and kind of work around that circle, than opposed to going completely into a different industry.
Well, especially if you're referring those business lines that you mentioned, be it tax services, P&C, employee benefits, if you're referring that out anyways, if you can figure out a way to capture that revenue, it's like you said, great way to diversify. You're still somewhat in your wheelhouse. You get to understand the logistics of manufacturing a business deal or creating a complementary business. And then from there, when you have more stability, is when you can kind of venture out into some unknown places, knowing that you got a good base set up. Because if you're just reliant on your financial planning practice and you go to invest in a business that you know nothing about, and then this year happens where the market's getting absolutely crushed, like you're in a precarious position. So I like the idea of expanding upon your base before totally venturing out into industries that perhaps you don't have experience in.
I think the hard part about our industry is our margins are constantly getting squeezed, right? For what you sell to your clients, you make a lot less than you made 10, 20 years ago. And as I talk to business owners in other industries, some of them are just experiencing for the first time during this inflationary period what it's like to have margin compression. And we've been dealing with it forever. And so if you're an advisor and you're dealing with the fact that you sell the same thing, service the clients the same way you did 10 years ago, but you're making less money, you either have to move up market, or you have to be able to better serve your clients by being able to offer more products or services. And I think that's where, as an entrepreneur, you can go. I think the hard part, though, is to know who you are as an advisor. As an advisor, it's a tough move. In the beginning, we start out as salespeople, learning how to position products, effectively communicate, influence people to be able to make good decisions for their family. And then your business starts to scale and you slowly start to become a CEO and a business owner. And it's always not an easy transition to move from, being able to serve clients really well to being able to run a bigger business that has employees, junior advisors, and all this other complexity. And I think if you can be able to become a business owner, then I would go look at other opportunities. If you're just really good at giving advice and supporting your clients and helping them make good decisions, I would go figure out how to do that better than opposed to trying to venture out. And I think that self-awareness leads to that self-development in the right way that you want to grow as an individual.
Yeah, I agree. Some people are cut out for it. Some people aren't. And that's not necessarily a good or bad thing. It's, to your point, just being self-aware to increase the likelihood that you have success, however you define that success. There's multiple different ways, to go about that. Now, we've talked about a lot of the positive stuff and the success that you've had. And I bring up this next topic because there's a lot of M&A activity in our industry, as you know. And I don't know exactly the context for this next point as to whether it was in the financial services industry or in a different industry that you're involved in, but I'm sure there's still some takeaways that people can walk away with that they can look out for if they're going to participate in some of the M&A that's happening in this industry. So I know we had chatted previously about a partnership deal kind of gone bad, so to speak, and it cost you $500,000. So call it, an extra tuition payment that perhaps you weren't expecting, but hopefully you learn something and you can save some other folks that same tuition payment. So tell us about kind of what went on. What did you learn from that? What can people sort of keep an eye out for as they're considering partnerships, be it with another financial planning firm or, maybe a PNC or an accounting firm or a totally different industry altogether? What are some of the things to look out for?
Listen, I'm a fan of partnerships. I'm a fan of joint ventures. I think it allows you to scale quickly. And, back to what you were saying beforehand, there is a piece of knowing yourself and bringing on a complementary skill set for you. In fact, my partner right now, it's been a tremendous partnership, and I couldn't be more excited to be in business with him. The partnership you're referring to is an expensive one, and most of those are legal. In hindsight, I think there's a couple of things. As I would go slow into business with people, oftentimes it's just like dating. There's a honeymoon phase associated with it. And I think the longer you can take time to almost date and deal with issues and kind of see how that person handles conflict, issues, issue resolution, I think that'll allow you to be able to make better decisions. And I think sometimes we're in such a mode to grow, and we find something that's an easy solution, or in this case, someone that's an easy solution, we might jump into that partnership quicker than before. I also think when you're first starting out and you're starting to be able to grow your business, a lot of times you might go into a partnership and might not understand all the legal contracts associated with it. And I think one of the biggest things I've learned now is I have to read legal contracts in the morning. I have to read it where, there's not a lot of stuff going on. I don't have distractions. I'm not rushing it. I'm taking time and circling and making notes and completely understanding everything. And that just allows you to start to really put yourself in a situation to get away from all the things that partnership could do to help you grow, and to really walk through where all the constraints could be and the possible issues could be, so you can make a better decision associated with it. And so, it was, I've gone into other joint ventures and other opportunities where partners have gone through, the taking it slow, understanding and working through some issues before we go into a full partnership, and then really vetting out the legal agreements and the understanding of it is important to be able to do it. And then the last part, and one of my good friends, Dev Matwani, he's a real estate developer. He said this to me when I was going through that breakup of that partnership. He says, you can't have a good deal with a bad partner. And oftentimes we get so excited about a deal or so excited about an opportunity that we don't look at the partner that's there. And, I live in South Florida. They say South Florida, but South Florida is a sunny place for shady people. But, really making sure you know that person's reputation, that person's how they've done deals in the past, and you take the time to do that. And if you have any feeling that person cannot be a good partner, no matter how good you paper it up, no matter how good the terms of the deal are, that deal will never be good if the partner's not good. And so that part Dev's quote on that one just sticks in my head nonstop all the time if I'm looking to do any other, partnerships or joint ventures or opportunities.
That's a really good saying to hold on to. I feel like a lot of people can kind of look through rose-colored glasses, so to speak, and be blinded by what's directly in front of them in terms of like red flags and things that they look back and they're like, oh, I should have trusted my gut. I should have listened to so-and-so. I think that's really, really good perspective, and just making sure that you're putting yourself in situations somewhat intentionally to kind of problem solve together and see how you guys work together to see if it's something that could actually work out long term. But I like that a lot.
I've now done that anytime that I think there's an opportunity to work with somebody long term, whether it's a formal partnership or not. I always try to come up with a project to work with them on first.
That's a good call.
What's a project that's mutually beneficial for both of us? That if it works, it's great. If it doesn't work, it's still something we thought it wasn't a waste of time to be able to do. And I do those projects to get a sense on if there's a more formal relationship that I could jump into with them.
That's cool. Yeah, I like that a lot. Now, one thing that a lot of advisors struggle with when they're in that call it transition from, the initial salesperson to now the business owner who actually has an entity with, multiple different humans that you got to be responsible for putting food on the plate for, is through like that hiring process, the onboarding process. I know we talked last time about you utilize what you referred to as a 90-day sprint and a 4-day work week model to help create highly productive employees. I'm just going to kind of leave it at that and see where you take that. But I'm curious to know, why do you think that's effective? What's happening in those 90 days? And then help kind of explain that 4-day methodology.
Yeah. So instead of doing annual planning, we do 90-day planning, and we do these 90-day sprints. And so myself and my team, and this goes to every department, does the same thing, is you do an offsite every 90 days, recap what was important to those 90 days, and what are you going to accomplish in the next 90 days. And so instead of having these ups and downs that you have during the year where you're off to a good start, you slow down, and maybe you kick back in, summer's slow, and then by September, October, you're like, oh, I need to make up for the year. You're kind of doing that in a much shortened time period. Your first 30 days, you're gunning. Your next 30 days, you start to slow down. Then you're like, wow, I only have 4 more weeks. The year's almost over, right? The 90-day sprint. Mm-hmm. And I'm just going to crank through that and try to be able to get those goals. And it starts to break them down into bite-sized pieces. What we've done is we built the firm and even the compensation associated with that all around those 90-day sprints. Instead of annual bonuses, it's a 90-day bonus. Mm-hmm. And it's based on you hitting those goals for those 90 days. So it's allowed our employees in particular to be able to really figure out, how can I best support the advisors to grow? But instead of doing it in these long responsibilities, it's in these short little windows to be able to build projects or be able to build some type of extra opportunities or alpha to help our advisors grow faster. Then what we've also done is realize that we got stuck during COVID and during lockdown into these Zoom cycles where it's just you're in meetings over and over and over again. And so, to help build culture, we looked at a number of different ways to do culture. We have unlimited PTO, but another thing we have is the 4-day work week. And so you have the opportunity to work 4 days instead of 5 days. Now, what I found is most people won't do it. They'll try to stick with the 4-day thing. But what we've asked is for Fridays to have no meetings. Fridays, there's no meetings at all. And you really only have to work those 4 days. And so what that's allowed is, for a cultural perspective, people to feel like they can be more productive with the days that they're there. But it also gets people out of having to have to do formal meetings if they are going to work a 5-day work week. And they have the choice, 4-day or 5-day. The employees do, they choose what they want. But on the 5th day, is never any meetings on Fridays.
Now, does their compensation change between 4 days and 5 days, or it's just truly a personal preference?
Truly a personal preference. Technically, they're supposed to work an extra hour and a half a day. So it's 8 to 6, opposed to like a 9 to 5 model for those 4 days. But the employee gets a choose. And the same thing with the unlimited PTO. It has to be pre-approved ahead of time. But the concept was, what we learned during COVID was our employees, the people that serve our advisors for Coastal Wealth, are very engaged. We don't have to make sure they're working. We don't have to check to see if they're in their office. We were all virtual. Mm-hmm. Why would I not give them the flexibility to decide how much vacation they need to do their job? Why would I give them not the opportunity, if they can do all their work within 4 days than opposed to 5 days, then let them figure out how to do it in 4 days? And really where it was I didn't want to change our compensation at all, although we improved it with inflation and many people got pay raises and opportunity to make more money. It was more of the fact of, we have entrepreneurs inside our company that help serve those advisors. And I don't want to be able to say they have to be working at a certain time period if they can do their job and responsibilities. And go back to that 90-day sprint, it's abundantly clear what you're going to accomplish in those 90 days. How you decide to accomplish that, I'm not too worried about.
There's a few things that you said that kind of really hit home with me and kind of confirmed some thinking that I've been doing. One is, I find too often that advisors or business owners in general, even, they tend to hire, call it staff or worker bees, if you will. I think to really elevate in your career and in your business, you have to find those entrepreneurial people. And sometimes that just takes a while, which is the slow to hire process that you alluded to earlier. But I really like that idea because you're finding someone whose zone of genius is doing this thing, whatever that thing is, and give them the freedom and the flexibility to, build that department up or build that process up, whatever it may be. I also like the whole 4-day work week thing. So I kind of structure my calendar in a similar way where I'd rather front load everything and then, have a lighter day on Friday where I'm still probably doing some work, but typically not in meetings. And it's amazing how I feel like it's pretty common for people to waste a whole day during a week. When you think about all those micro moments or those 60 minutes here, 30 minutes here, and it's like, listen, wouldn't you rather just condense all that and fire through it and then go and chill on the Friday if you can? So I like that you've given them the opportunity to do so. You didn't force them by any means, but you gave them the opportunity to make that decision for themselves and scratch that entrepreneurial itch in their entrepreneurial role. So you're not just talking about having entrepreneurial people, you're allowing them and giving them the freedom to act as if they were entrepreneurial as well in terms of managing their time and structuring their calendar to be conducive to their life in and out of work. So I really like the way that you're approaching it. And the last thing is the whole 90-day thing. And you mentioned this book earlier, so I'm sure that there's some similarities to it, plus your own flavor added onto it, which is the traction model. And then everyone kind of gets assigned, their quarterly rocks, so to speak. And now everyone has ownership on a particular thing. And you circle back up in 90 days and see where you're at and get some help in between. And, the other resource for those listening outside of traction that's fairly similar is the 12-week year.
Yeah.
Which is really good as well. So whichever one resonates with you, run with it. But there's a lot of power in condensing timeframes for accountability purposes, follow through purposes. And it's just tough to relate to something that you want to do in a year and show up every single day to work towards it. So I enjoy that 90-day model very much.
Success leaves clues, right? And so you take a look at whether traction, 12-week year, you read a lot of the success books, they'll tell you in just different words what you should do to build a successful model. What we did was with the 90-day sprint, it's bottoms up. So go back to that entrepreneurial side. Who's ever building their 90-day goals, they're coming up saying, what is it that I can do that's most impactful in these next 90 days that's going to make a difference for my department or what's kind of in my wheelhouse? And really what they're trying to do is not their day job. What is it is like a project. What is it? Something I can accomplish in 90 days that's going to be a repeatable system that over time is going to have a lot more legs and a lot more impact to the business. It's not about their day job and their goals. It's about adding this extra piece, meaning you're an entrepreneur, you see a gap, you see an opportunity with regarding your department or what your responsibilities are. And you're like, if I build this in the next 90 days, this is going to make a meaningful difference. That's really where those 90-day goals are. It's something that you can accomplish within 90 days. That's a repeatable system that once you do it, it's going to keep rolling to be able to help grow the business. For myself, as you're saying, the way I run my schedules, I do the 4 days, right? Fridays, I always have open. Some other priorities come up during the week, and I struggle trying to fit them into my week. And so on Monday, I'm allowed to start booking my Friday. And so that Friday stays open. And then as things pop up during the week, that's the day where I'll fill what's important that I know I won't have enough time for the week. I started that about 2 years ago, and it's really made a difference for me in being able to not miss opportunities that are coming up that week because my schedule's too busy. But my Mondays are miserable, probably like yours. I just pack my Mondays with as many meetings as I can to try to get the week off to a good start.
I mean, I'd rather eat shit Monday and Tuesday, and just get through it. And then I love the Friday thing. One other thing that I've incorporated is every couple weeks, every few weeks, I'll try and sneak in a half day Wednesday. It's just a perfect break in the middle of the week. And when I say break, I mean you could go to the pool, to the boat, or you could catch up on the stuff that's on your plate, but it kind of removes the meetings from your calendar so that you can actually focus on things and not just kind of be in Zoom or out on meetings. And then there was something that you just said. I really enjoyed the distinction that you made about with those things that the entrepreneurial employees are doing over that 90-day period. It's not just to check the box, I'm going to do my job every day for 90 days. It's no, what can you do to add value to the firm that's above and beyond your call of duty? Because with that additional value creates additional revenue or, additional efficiency, which ultimately results in additional income, for that person as well who's taken on that project. So I'm glad that you made that distinction.
Yep. Yeah. You don't got to reinvent the wheel, but I want you to figure out how to make the wheel go faster. And I'm not asking for you to just create something out of the blue, but you're closest to the work and you're going to see an inefficiency and you could probably build something to make that inefficiency much better. I'm asking you to identify those and be empowered to be able to figure out how to make that better. And that's the whole point.
Love it. Well, you're a fast talker like I am, which I appreciate. So this moved along a lot quicker than I was anticipating, but I think that it's jam-packed with value. I think that the folks who are listening, if you didn't take notes throughout and take away some of the ideas and perspectives that Jeremy shared, definitely be sure to do so. One thing that I wanted to go through today that we go through with all of our guests, Jeremy, and for those of you who this may be your first time listening, is we try and distill a reading list for folks, and we get guys like Jeremy and the other folks that we've had on the show who have had success and share a book that's had an impact on them, because if it's had an impact on them, it will probably have an impact on you. And the one that you chose was Mastery, The Keys to Success and Long-Term Fulfillment by George Leonard. What is it about that book that has kind of stuck with you since you consumed it originally?
So I read this book right when I got into my career. And there's one concept of the book that's just always stuck with me a lot. The idea is that if you're learning everything, you're learning how to horseback ride, you're learning how to play tennis, it's not this constant improvement all the time that you're growing and learning more and more every day, every week, every day, every week. It's a series of plateaus instead, where you feel like you're doing something, let's say you're working out a ton and you don't feel like there's anything changing. And then all of a sudden, 1 week you'll notice a change or you realize you're stronger and something pops up and then you go up a little bit and then you kind of get stuck again in the same thing again. And it's basically these series of plateaus where you kind of pop up to different plateaus. And the concept in the book was you have to learn to love the plateaus. Most people get bored, and it goes through a number of examples of like, somebody will get to a plateau and they'll be the dabbler and they'll just give up and they won't keep trying to improve at that side because they feel like they're not making any changes. And so for myself, I've tried to just make sure I'm not gauging success on my improvement on a day-to-day basis, but instead just do the activity and keep trying to make that activity, whatever it is I'm learning, whether it's business or personal, make sure I'm doing the activity I know that over time will be successful. And I keep trying to do that activity better and better every day. And although I might not see the improvement of that activity or my skill set at that time, if I learn to love that plateau and doing that activity, over time, I'll just keep popping up and growing faster and faster and faster. And so anytime I feel like I'm getting bored, anytime I feel like it's getting repetitive, anytime I feel like I'm not seeing the improvements I want, I just remind myself over and over again, I got to learn to love this plateau.
I think too, to expand on that, and maybe it's included in that book as well. I haven't read it yet, so I just added it to my list. So thank you.
Yeah.
I think it's important to, whether it's full out journaling or just kind of documenting and bullet pointing your journey as it happens, so that when you're on that plateau, you can look back and say, hey, I was here before in a lower plateau and I committed to the process, and look where I'm at now. Because I think we're quick to forget oftentimes like where we came from, because we're always so focused on moving forward. So having that ability to kind of go back and reflect on the journey would be a nice complement to that mindset that you just mentioned.
No, it's interesting you said. I've been journaling since college and I never really understood. I just kind of wrote down when I'm trying to work through issues or I'm thinking about something on it. And, now I use an app. It's called the Morning Journal. I make sure to kind of write 500 words. So you keep flowing and going through it. And I probably do it 3 or 4 times a week. But what it allows me to do is if I have an issue, I have to keep writing it out. And I found if I write it out, I can figure out my issue faster than my monkey brain can think on its own without writing it down. What it also does is, like you're saying, is I start reflecting back on what I'm working on that I think is an issue. And I start to realize, oh, wait, this has improved a bunch, or this is better than I thought. In my head is where I was going into this negative self-talk that really wasn't there. So I think you're spot on the journaling side. It's a powerful tool most people don't use, and it usually can get you through most issues if you take the time to slow down enough to do it. There's another thing I do on big decisions I make. I took this from Tim Ferriss. You can Google Tim Ferriss fear setting. And he has this fear setting exercise, which is basically it's a structure to give you about journaling and how to journal through an issue you might, or something, a fear you might have that you're ready to do. Maybe it's launch another business. Maybe it's you're going to take on somebody. Maybe it's end a partnership. Maybe it's start a partnership. But it's a process of journaling, but it gives you questions and a structure to do it to help make better decisions. So whether you use a formal structure like that, or you just get out with a pen and paper or your laptop, I think you'll be able to start to either reflect back and realize things are moving well, or help you get through an issue.
Love it. Well, before we sign off, Jeremy, if someone wants to follow along with your journey or learn more about you or try your restaurant, if they happen to be in Pennsylvania or in Florida, where can they find you and where can they keep in touch?
First, you can listen to the podcast. The podcast is Upreneur, like the letter U. And the idea is a University of Entrepreneurs where I interview entrepreneurs very similar to yourself, David, which is a blast to do. So you can check out the podcast, check out Instagram at upreneur.com. Otherwise, my financial firm is Coastal Wealth. So just Google Coastal Wealth or go to coastalwealth.com. You can find that. As for all the other stuff, you can probably Google Jeremy Straub and figure out that.
Love it. Well, for those of you who are listening, appreciate your time. If you would be so kind as to toss us a review on whatever platform that you listen to, that would be fantastic. Also, share this with a friend. Share it with someone who you think wants to expand beyond running their financial planning business, who has that entrepreneurial itch that they're always talking about. Maybe this is the episode that will give them the inspiration and the guidance to start down that journey. And Jeremy, I appreciate your time today. And when I venture over to the East Coast of Florida from St. Pete, I'll make sure to hit you up and see if we can't grab a drink and meet in person.
I'd love to have you. And thank you for what you do, giving a venue to be able to talk to financial advisors on how to improve their business. There's not enough of those opportunities for people to learn and get educated on it. And so I'm excited there's people like yourself out there providing that.
Appreciate it, man. Have a good day.
All right, you too.